We're going to start the event in 30 seconds. 1 minute. Yeah? Okay. So if everyone could take their seats. Guys, please. Let's start taking seats. Okay. So good morning, everyone, and welcome to Plug and Play, or Broker Age event. Truth be told, I'm standing upstairs here on the stage, but the truth is all Liz. She was the one who put together the event. Right now, our team is super spread thin, and she just womaned up and put together everything. She put together the panels, the event, and she just asked for minimum help for everyone else. So how many people here know exactly what we do and everything we're up to? Okay, everyone, I'm assuming. I hope so. Do you want me to quickly say, okay, let me say a few things about Plug and Play. So, Plug and Play. Our team has one really big focus, at least external facing, and that is building the largest ecosystem around InsurTech and for the insurance industry. And our definition of InsurTech is as broad as it gets. And the good thing is that we have programs in mobility, in IoT, in retail, in fintech, and all overlap a lot with insurance. And the reason we do it is for our own selfish reasons, which is we're investors, and we realize that we're not the biggest experts in the insurance industry. I run the insurance program. I never worked in an insurance company. I'm just starting to learn what underwriting means. And at the same time, my background is engineering. I understand technology to a certain extent. So what we could do is that we help insurance companies with their innovation. They help us with due diligence, market fit, how good the company is, does it make sense, and teach people like me what insurance is. And at the same time, we realize for our startups to be successful, one of the most key things they need is access. For them to get to the right level of people in the corporate X or corporate Y, they need to knock on doors for 8 to 9 months. But if we could tell them that from 60,000 companies in this company, people in this company, this is the person you should talk to, we save them 6 months of time that goes towards product development rather than business development. So for that reason, we started creating these massive ecosystems. And the model is pretty win-win-win. It's like startups win because of the access, the corporates win because of their, getting to know companies that is super relevant to what they're looking for, being underwriting, telematics, or payment solutions. And we win because of the data that we get and the traction that our portfolio gets. So based on that, our Plug and Play InsurTech started May 2016 last year. We had Munich Re, USAA, Sompo, State Farm as our first 4 partners, which 3 of them were from our IoT program, 1 of them fintech program. And now we are by far the biggest platform in Plug and Play, at least in terms of corporate partners. We're close to 60. We should be 60 in this week or next week. And that for itself speaks on how ready for disruption the insurance industry is. And because of that, we tried to see, and because how excited everyone in Plug and Play was about insurance, we started to see what are the different ways that we could even add more value on a more global level to everyone. And that's why this month alone, we launched our New York offices, Munich offices, and Tokyo, dedicated to InsurTech on top of Silicon Valley, and there's 2 or 3 more offices coming in 2018. And the objective is that we want to be a lot closer to your business units and a lot closer to startups in different ecosystems, being Asia, Europe, or East Coast of the United States. Another thing that we try to do is that we try to do these more specific events around specific value propositions. This one of the biggest topics that we had was that, we have a lot of major corporates, Fortune 500 insurance companies as partners. But the thing is that a lot of the independent brokers or a lot of the independent agents don't get as much value from us. And on top of that, a lot of the startups, the whole InsurTech ecosystem is known as disruptors of distribution, people who are trying to replace agents and brokers. But we strongly believe that a lot of the InsurTechs, there's definitely a lot that are trying to, go after markets that could be easily replaced, that replace the agents. But a lot of InsurTechs realize, I talked to a lot of them that realize that after going for direct distribution, that is not going to work. Is that replacing a relationship that a broker has with a customer is not that easy, or the one that an agent has. So this event specifically was our way of talking about that, is that there are a lot more companies who are trying to enable brokers and agents from lead gen all the way to back office, all the way to analyzing their books, than there are companies who are trying to replace them. And that's why today you're going to hear from a lot of experts, a lot of people from the industry who are going to share their thoughts about transformation of agents, about different trends that are happening in the space, and a lot of startups who are trying to bring some value in some scope. It could be anything from a product that could be a new product specifically for agents, all the way to companies that are completely creating a new digital toolkit for a lot of the processes that agents need. That being said, I know you guys are not here to see me. You're here to see the startups and the other speakers that we have. I want to give the microphone to Liz, who's going to start the event. Thank you so much.
Thanks, Ali. So welcome, everyone. Thank you for taking the time to come out to Plug and Play and to our first ever Broker Age. Without further ado, I'd like to kick off our first presentation from someone originally from the UK, now living in Toronto. He's the Executive VP of Brokers and Distribution, Jason Stora.
Hey, thanks. Is this on? Yeah, thank you, Liz. So look, let me grab this. Thanks very much for inviting me here and allowing me to take part of this. There's a few of my colleagues from Aviva, one of which I know and a couple that I don't know, so it was nice to meet them and see that they're actually doing something in California, because I'm a bit worried that they're not going to come back to Aviva after a few months here. Somebody said to me, when Liz said to me and very kindly approached me about coming here, I thought, November in Toronto versus November in California kind of makes a no-brainer. This isn't quite what I was expecting, but it's still warmer than Toronto. So I'm going to talk for a few minutes about some things that I'll have a bit of a Canadian bias, and I apologize for that. I've been in Canada for a number of years, and as Liz said, I'm responsible for Aviva's broker business across Canada. So some of what I'm going to say definitely has a Canadian flair. And I'll also say I'm a big advocate of brokers, right? I don't think I could do my job if I was one of those people that think, oh, the world's ending for brokers, and the industry is getting disintermediated, and it's going to be disrupted by non-brokers. I just genuinely don't believe that. But at the same time, I will try and be quite critical of brokers, because I think that's, it's the stuff that needs to be done better that makes a difference, not the business as usual stuff that people don't really care about or is actually going okay. So a little bit of context. I don't think anything in my presentation actually will be earth-shattering, but I just want to try and focus your attention on a few things. So first of all, and again, this is a Canadian context slide, everybody knows the market is shifting, right? But I've been hearing that. I came to Toronto in 2002, and I've been hearing brokers are getting older, the market's shifting, direct is coming. Well, actually, that's just continued at a fairly sluggish pace for the 12 or 13 years that I've been working with brokers in Canada. The thing that's different now a little bit is we are actually starting to see some really innovative disruptors and new entrants who, one, they have deep pockets. So I don't know how many people in the room would be familiar with Sonnet. So Sonnet is the direct arm of a mutual insurer in Canada. So that mutual insurer has quite a lot of money to spend, and they're investing in diversifying their distribution. So Sonnet is going hard at the market. And then there's Esurance, who I think everybody here would be familiar with, and Bel Air is a direct writer from another, actually predominantly broker-based business in Canada. There's emerging distribution. There's new companies looking at trying to come in left of center to try and disrupt the market. Again, the top statement in the middle, insurance companies are becoming increasingly digital. That makes perfect sense, and I think we can all relate to that. The problem is in insurance, I have way greater expectations of other companies and other industries as a customer than I do of my insurance provider, whether it's a broker or an insurance company. But there are some very definite trends there around use of the internet, use of expectations around what people can do on mobile devices, the insurance providers aren't delivering on at the moment. And then on the right, again, as long as I've worked in insurance, people have talked about personal auto, personal motor insurance. It's all about price. price, price, price. I don't know that that's necessarily the case. And some of the data we've seen suggests that actually, for different types of insurance, there are some very, very different considerations. There's a lot on here, but really the headlines are kind of at the bottom. The left-hand side is just, this is some research that was done around what's most important to consumers from their insurance provider. And the left-hand side is all about personal insurance. And no surprise, you know, they're driven mostly by price, claims, simplicity, and online capability, right? And again, that makes total sense because it's quite a transactional purchase until you get to the higher value personal lines type coverages and insurance. So I don't think anybody would look at that and say, well, that surprises me. And the same on the right-hand side. The right-hand side, because there's so much, you know, at least right now, there's so many brokers that have a role in commercial insurance compared to the direct type commercial insurance offerings out there, that the advice, the advocacy, the simple to do business it obviously comes through a little bit more on the commercial lines. So, broker value proposition. I look at that when somebody, I was at a presentation internally within Aviva a few weeks ago. Somebody used this slide or a version of it for something else. And I said, yeah, that kind of makes total sense. My problem is that I don't think that is the broker value proposition today. Right? I don't think brokers are focusing on data and analytics. I'm going to talk about broker management systems in a second. But most BMS systems have a ton of data in them that brokers can't unlock. And I'll talk about the vendors in a second. But that, you know, data analytics, I don't see that. I don't see brokers having ongoing customer touch points with their customers and engaging with them on a frequent basis. I see a renewal that might be a piece of paper, but I don't see value-add touch points. And I look at brokers if I have to, you know, simplify the world of brokers or the way that Aviva looks at brokers, one of the lenses I have is high volume versus high value. And it doesn't mean there's not value on the volume side, but it's, you know, when we look at our broker plant across Canada and actually across the world, you can, you know, the brokers that are just, they're opening the funnel as wide as possible. They want as many markets and as many choices as possible, and they're driving volume, versus the ones that are perhaps looking at, actually, what's the value? What's my differentiation? Why is somebody paying a little bit more to deal with me for their insurance needs? And I just don't see brokers driving that ongoing touch point. And a bit of an example, a couple of years ago, in Canada, we rolled out a new product. So overland water, flooding is a big problem in Canada. There was no meaningful solution in the market, and so we were first to market with a product. And this isn't an advert for Aviva's product development, because I wouldn't say we're particularly great at product development. I don't actually know anybody in insurance that is really knocking it out of the park on product development. But we were first to market, and one of the big criticisms we heard, and a lot of noise we heard from brokers, was the amount of work it was going to take them to do that. And we came up with a number of solutions to try and help that. But the overarching theme that we came away with was there's something about the business model, the customer engagement model, where touching base with a customer once a year has become kind of acceptable. It's become acceptable for brokers, acceptable for insurance companies. And I don't think it's acceptable for customers. I just think they expect it. They don't expect any better, right? Online customer self-service, you know, I can do everything online. I can do transactions that are far more complex than buying or renewing my insurance policy. And then segmentation and recommendation. The piece on the right there, the bubble on the right, is the one that I wish brokers could find a space on. And again, I'm not pointing the finger solely at brokers. There's systems, there's BMS vendor issues, there's insurance company systems issues. But that recommendation, I would love to be able to, I don't know anybody in Canada, and I'd love if there's somebody in the US that does this, please grab me at a break, because I'd love to speak with them. But if a customer goes online and makes a change to their policy, the value that I see a broker having is seeing that the next day, or seeing that at some point, reviewing it and making sure it's okay, and contacting me if they've got any concerns. I see that as a value add for brokers that doesn't happen today. Now, it doesn't happen for many, many reasons. The the key findings thing at the end, brokers that are investing in digital, and they don't need to be investing a lot of money, but brokers that are investing in digital are growing way more than brokers that aren't, at least in Canada, right? I think the same is true in certain parts of Europe, and we see that. And one other thing we see is, if I think about the kind of conversations I have with different broker groups on a weekly or a monthly basis, I quite often get, especially with broker associations, and I can say this because someone from the Insurance Broker Association of Canada sat next to me, so I'm going to watch what I'm saying. There's quite often a lot of conversation around protectionism, right? Worried about what's happening, worried about how do we stop this wave of expectation hitting the industry and technology hitting the industry. And yet the conversation with digital brokers is about take away the admin, take away the stuff I don't need to do, and it costs me money and it costs me employee issues and time and effort. Take that away. I don't care if you do that. Let me focus on what my value proposition is as a broker. And one example of that is whenever we send a renewal out with any kind of increase, if we tell the broker the renewal is going out with an increase, generally the broker will get involved. If we just send the renewal out to the customer through the broker system, even if it has an increase of up to 3 or 5%, our retention rate on that business is up to 4% higher. And again, I think that's just, when you look at that, you say, oh, it makes total sense. People understand small inflationary increases. When you don't engage with them because it's not a big deal, people carry on and it's business as usual. So I think sometimes insurance companies and brokers are our own worst enemies for creating problems. So I said I was going to talk about BMS, so broker management systems. If I was a broker, this is probably the thing that would keep me up at night most at the moment. There might be other things that make me worry about the future and what's happening in my industry, where my customers are going, what's important to my customers. But this is the thing that I think that it's a burning platform for brokerages today. So, but I'm going to try and be deliberately black and white on this. For the last few years, last few decades, there's been a very small number of broker management system vendors. And I think they've got used to having not much competition. I think they've got used to expectations being pretty low. I cannot remember in 13 years in Aviva Canada talking to brokers, ever talking to a broker and asking them the question, how's it going with your BMS system? And the answer being the best answer I've ever heard was, I guess it's the best of a bad bunch. And that's not very inspiring, is it? Right? It's not very inspiring from a customer perspective, from a user, if you're paying for that. Now, interestingly, there's a number of new entrants coming into the BMS space at the moment. We see that. We've done some InsurTech, BrokerTech things, and overwhelmingly some of the ideas, I would say 60% of the ideas we get from brokers are around brokers wanting to redesign or design their own BMS platform. But this is a real problem, right? And I'm not saying that insurance companies don't have tech and platform problems, because we do. Actually, one of the biggest areas of IT spend over the last couple of years for insurance companies and for the next few years is going to be replacing legacy systems. As an example, Aviva's platform, our IT system, was designed before I was born, right? And I'm not going to tell you when I was born. It was in the 70s, early 70s. But to think that we're using a foundational system, I can't think of anything in my life that I'm using that was created in the 70s. I'm sure someone could pick that statement apart horrendously, but that's kind of frightening. So insurance companies, we've got our own issues, and we're spending a lot of money on replacing legacy systems. I think it's a burning platform for brokers. And one of the things I've heard in the last couple of years is, we don't have the money that insurance companies have. We don't have your deep pockets. We don't have the tens or the hundreds of millions of dollars. You might not have, but you need to find a solution. Because I think this is what's going to make the difference in the next 5 years between brokers that can really thrive and ones that are going to find themselves just at a complete disadvantage and on a completely different playing field. So, Aviva and other companies are investing in building APIs. We're using middleware and trying to put some quick fixes and sticky tape over the issues. But the bottom line is, for anybody in this room that's a broker, if your BMS provider isn't showing you a roadmap to how they're going to upgrade their system, what it's going to give you next year, next month, in the future that you don't have today, and if you can't align those things with what's that going to mean for my customers, I think that's a real problem. And I don't see a really compelling solution in the market. I texted a couple of key brokers in Canada who I think are a bit more digitally savvy. I think they're leading the pack. I also texted a couple of brokers who are more traditional. They're really focused in their communities. The face-to-face presence, the community office is really important. So I just did a quick, it wasn't a statistically sound survey, but it was two ends of the spectrum of 4 brokers. And I asked them, what do you think about your BMS? I can't repeat all of the language that I got back in my text, but there was nothing in there that was positive. The most positive thing was they're starting to talk the talk. The problem is how quickly they're moving and their actual execution is night and day. So I think that's a real concern for brokers. Then the other part of that, which is absolutely linked, is what brokers are doing with your data, how clean your data is, right? How, are you using the latest version of Windows software or whatever other software, hardware you have in your offices, brokers have in their offices? How up to date is that? That again, as an insurance company person, that's been a big focus for us. We've had licenses out of date, systems with no future support that we've had to upgrade and get relevant today. And again, I just think it's too big an issue, but it's kind of beneath the surface for a lot of brokers that I think it's being ignored. So customer value proposition. Again, this is, I think somebody who had the creative for the broker value proposition also did this slide, but I saw this a few weeks ago, or a version of it. I looked at it. Yeah, it makes sense. I should just explain the thing at the top, pink and yellow slips. If you get car insurance in Canada, you need what's called a pink slip in your car to prove if you get pulled over that you have insurance. So you look at all those things, what do customers want, expect, recommendations, online payments, prevention and notifications. The problem is I just don't think that that's happening today for most customers. I think most customers buy insurance, A, because they have to if they want to drive a car on the road, or they want to get a mortgage for a house or a condo. So it's still, we haven't moved away from that grudge purchase. And I'm a big believer in brokers have a fantastic role to play in taking insurance from being a grudge purchase to being a value-added purchase and something that people see the value of. And, at any given time, roughly only 10% of insurance customers see the value of insurance from a claims perspective. So let's just assume for a second that most of those people that have a claim have a good experience. Right? Obviously, there's always going to be a percentage that don't for whatever reason, but I'm just going to focus on the people that have a good experience of a claim. Right? And whether it's a good experience with their insurance company or it's a good experience with their broker, they understand the value of, my house just burned down. I'm really glad I had that insurance. I heard in the car last night on the drive here an advert for the California Earthquake Agency or California Earthquake. It was like booming music and dramatic, and you need earthquake insurance, which makes total sense to me. But I can tell you, in the west coast of Canada, very few people think that they need earthquake insurance. Right? Well, if ever a big earthquake hits, that's going to be a massive problem for the industry. But more importantly, it's going to be a massive problem for people that didn't get earthquake insurance. I think brokers have a fantastic role to play there, but they're not playing that today. Right? Customers are buying insurance because they have to. They see it as a line expense item, especially increasingly small to mid-market commercial businesses look at, and actually large commercial businesses who are paying up to millions of dollars in insurance premium a year, see insurance as a line item, as an expense that they need to try and control and manage down like everything else. And I think brokers have a bigger role to play there. The bubble about prevention and notification, I would love to get to a space where, everybody sees when there's a weather alert. Again, I apologize for using a very Canadian example. In Alberta, it hails a lot. And when it hails in Alberta, they can be the size of golf balls. And what they tend to do is hit every car on the road and every car that's parked. And all of a sudden, you leave your car and it's fine, and you walk out after a hailstorm and it's got massive dents in it. That is completely avoidable in the world of prevention, text, notification, and just saying, there is a big storm coming your way, put your car inside, or whatever you need to do. Right? That's a value that I think brokers can add, but I don't see enough of it today. This last slide is really, I'm not going to spend much time on this. The point of this slide is just to say, from an insurance industry and broker, there's one lens on it, disruption perspective, there's a number of bets that insurance companies can choose from. The bubbles on the top are just the ones that Aviva is focusing on. But the point there is there's lots of things that are either distracting or are really, really interesting and intriguing from what's going on in the world. And Aviva's making some bets in certain areas, and that means we're putting aside others. And I'm not here to debate. I'm happy to debate it, but I don't want to necessarily do that now. My point of that is I'd love to see every broker do the same, because what worries me about the broker business that I'm responsible for is results are okay. Results are okay, growing low to mid-single digits. People feel good about life. Rates are either soft or hard, depending on where you are in the country, where you are in the world. And things feel good, but there's this number of factors that are going to hit the industry and hit brokers, hit intermediaries. It's not going to be one big sea change overnight, this tipping point that I've heard about for years. It's going to be, I also don't think it's death by 1,000 cuts. The positive side is we see every day and every week a number of brokers who are really starting to change the way they invest. One of our largest brokers from a growth perspective in Canada has 25 employees, and 21 of them are software developers, data scientists. I look at that and I just think there's somebody that sees the industry and the art of the possible very differently to somebody down the street that would have 25 employees, and they would be out pounding the pavement, knocking on doors, trying to drum up business. And I think there's a role for both, but the thing for brokers around the digitizing their business and investing in technology is get rid of the admin. Right? There's no value in me phoning a broker and having to answer 15, 20, 30 questions. The value is, for the most part, that information has already been collected and provided, and the broker's now challenging me on what I think I need from an insurance perspective versus their expertise and what they think is important for me. So I'm going to pause there. Liz, I don't know if this is, you want me to just sit down and we go straight into the panel, or you're nodding violently?
Thanks, Jason. Everyone, if you'll give Jason a round of applause.
Sit here.
And you brought up broker management systems and customer expectations and legacy systems. We'll dive in a little bit more on back end as well for our first panel. Without further ado, Chip, I'm so sorry if I say your last name wrong. I've been saying it over and over again in my head. Is it Basiaco? Okay. CEO of Trusted Choice. Come on up, Chip. Aaron Schiff, founder and CEO of Matic. And Kim Opheim, president of Opheim Consulting. And our moderator of not only panel 1, but also 2 and 3, Dick Cagney, managing general manager at KBW. Thank you.
Thank you for helping pronounce Chip's last name for me, by the way. Also, another round of applause for Plug and Play and for Liz in particular. She's been incredible dealing with my issues over time, and so I think we should all give her a round of applause. So this panel, I've kind of renamed it, called Embracing Technology, Digital Transformation and Digitization of the Insurance Brokerage Process. And we have 4 people up here. I know you can read their bio, so I'm not going to spend more than a few seconds on it. I'm probably going to do this wrong, but well, Jason, I think, gave a little bit of a background about himself. He started broker distribution for Aviva in January 2016. He leads the national distribution brokerage for the company up in Canada. Chip is the CEO of Founders Choice, Trusted Choice, nation's largest online marketing platform for IAs and IA insurance companies. Pretty interesting. Kim has about 30 years of experience dealing with many different property casualty fields in the Canadian insurance industry. And Aaron is a co-founder and CEO of Matic, which is an interesting company, an industry leader in mobile and online delivery of homeowners insurance. I was actually at a conference a couple days ago and had a chance to listen to Aaron talk about his product and services, so it's pretty interesting. So why don't we dive in? And I'm sorry to do this, Jason, because you prompted a couple questions. So how do you get the brokers to play the role that you talked about, right? Get more active, and you talked about the fact there's one group of 21 out of 25 people, a data scientist. So how do you get the brokers to take a more active role, and can you change or create demand for products that might not be in the marketplace today?
So the first part of your question, how do you get... One of the things I find is, whether it's insurance companies, insurance brokers, or any similar group of people with kind of the same interests or the same industry, groupthink doesn't work for me. Right? If you try and get a big group of people in a room and try and convince everybody to go through that door, some people are just inherently going to say no. Some people are going to go for it without thinking about it, and some people are going to do whatever in the middle. So for us, personally, I think, spending time having relevant conversations with each individual broker is actually the way I think I approach it and Aviva approaches it, and I know a number of the other companies in Canada approach it, because not one solution is going to fit everybody. So we look at a curve of how digitally savvy, how digitally invested brokers are, and if you're at one end of the spectrum, we're sitting down talking to you about different solutions than if you're at the other end of the spectrum. And I think as long as everybody has a clear view on what Aviva wants to achieve and what the industry wants to achieve on a broader scale, hopefully everybody can sign up to, okay, I'm being asked to join the journey here. And if I'm not going to do it, it's because it's not relevant for me, or it's not compelling for me based on what my values are or what I want to achieve in my business. The one thing I'd just say to add on to that is, it's more evident than ever that, I think for decades, insurance companies have treated brokers as this big grey mass of intermediaries, and the difference in what people are trying to do with their business, what their trajectory and timeline is, whether they want to grow, whether they want to prepare it for sale, that's never been as significant as it is now. In terms of new products, we're in a space where it's going to be an ongoing challenge for intermediaries to sell new products, especially in our industry, which is terrible for developing new products and bringing new thinking to customers' insurance needs. So I just think, actually, and again, I apologize, this is experience based solely on Canada, we've seen instances where new products have been brought to the market, and the folks that resist early on, there was more people resisting 2 years ago when we launched a flood product than there are resisting to some of the new products that are coming out in the market now. And I think that's just, they see the cycle of, okay, if one company launches this, the other companies are going to follow because they're going to have to follow. So better to try and think now how to get ahead of this than wait a year and miss the opportunity.
By the way, if anybody has any questions from the audience, please, we encourage that. Kim, please, go ahead.
I'll take a shot at that question because obviously Trusted Choice represents 20,000 agents and brokers across the country, and my easiest answer is you don't have to manage them. They're motivated right now. How many agents or brokers in the room right now? Feeling motivated? Yeah, feeling motivated. No need to worry. That's why we're all here. Okay. So I would let actually, it's exactly groups like this in this meeting and what we're doing and why we're coming together that is motivating agents and brokers to adapt right in front of us. And I'm here to help.
So you've created an online platform. How has that been in terms of the adoption of what you're doing?
Well, we're very lucky because we're a part of the family of the Big I, which that's how we have 20,000 plus agents and brokers. We're owned by some of the largest insurance companies in the world, including, I think there's a representative from Travelers back there. She's one of my bosses, probably doesn't know it, but I'd like to meet you later. And And so we launched this thing, and we invited all of the Trusted Choice or Big I agents to sign up. So you're sort of automatically in at the base level if you're an agent or broker member, and then you can sort of opt in to be more aggressively participating. We have 5,000 of those agents that participate at a premium level, where they're actually contributing. They have a profile on the platform and so forth.
Out of 20?
Out of 20,000, 5,000.
So why is that? Why do you think that you've got 5 out of 20? Is this the typical, not 80-20 rule, but you have a series of producers, A, B, and C producers?
Yeah. I mean, the other thing, to just being totally honest, is a third of agents and brokers, the whole insurance industry, of course, we have an age challenge, right? So you have a number of agents and brokers that are managed by people that realistically are going to retire in the next 5 years, something like that. They're not trying to transform their whole business. You've got a whole new generation of younger folks. There's the people in the middle. So it's probably a one-third, quick, leaning forward, sort of medium adopters, and then frankly a third that are okay to live by 1970s standards. So we're happy with 5,000 for right now. That's good.
Okay. Kim, I wanted to ask you to chime in on the first point, but you look like you're ready to talk, so why don't you offer your thoughts on this?
So I'm also here representing the Insurance Brokers Association of Canada, and our membership is around 36,000 brokers across the country. IBAC did a major survey in late 2016, and just to take the pulse of brokers, our membership, and the number 2 priority, and when I say the number 2 priority, it ranks right behind the number 1 priority, obviously, but was technology. So brokers, they live in the real world, they see what they can do on their smartphone, and then they're thinking about, well, why can't we do this for our clients? So it is a top of mind issue with brokers. There's a lot of impediments in their way, and oftentimes it is BMSs that are not being progressive enough or being able to provide the connectivity that brokers need in a timely fashion to meet the new challenges, segmentation being one of them.
Okay, so I want to swing to this guy right here. So you take a different approach to this whole process, right? So,
well, no disrespect to people either, but I fundamentally disagree with a lot of, not everything. I think you guys are right. Like, brokers need technology. There's a huge gap between technology, but what's the problem you're trying to solve? At the end of the day, you said it, how do you add value to the customers? And so what we think is, how do you get distribution? And so just what Matic does is we integrate directly with mortgage lenders and insurance carriers to provide home insurance at the point of sale. So literally, when you're getting a mortgage, when you need insurance, is the value we add. We're letting you know what are the best carriers and what are the best coverages for you when you need it. That's true value. So how is a broker going to compete with that? Now they should. Like if there's a relationship, great. How do you scale that? One way is technology, and you absolutely need that. We built our own agency management platform, as an example, because we had to, because you were absolutely right there. But if you build this great technology, how are you going to train 20,000 people how to use one technology? And you said this great, groupthink. How are you going to have 20,000 people like that technology? It's a really hard challenge. And the industry shows in 2 years in the States that their average insurance agent from McKinsey, they said 2 years, which I don't understand how that's possible, half the agents are going to go away because of retirement. So I think
wait, say that again?
According to McKinsey, in 2 years, half the agents are going to retire.
I don't know how
that's right.
Okay. It's not quite right.
That doesn't make sense to me.
There is an age challenge.
That doesn't make sense to me, but I guess my point is this, is like, how I look at this is, what is the true value you're trying to solve? And a relationship is strong. How do you scale that?
It really is about the customer engagement, right? I mean, however you're going to address it. Go ahead.
Agents and brokers need to adapt to exactly what you're talking about. So one of the biggest inefficiencies in the current process, Jason was talking about what are the value propositions. We spend too much time bumbling around trying to find somebody to help. You found somebody at the moment when they need help. You need to put those two things together, because what I'm guessing you don't necessarily have is an expert that can sort of lend comfort. You had a great list of value propositions. I would add one more, which is trust or accountability. So when you buy something as complicated as insurance, and let's suppose it's for your small business, and you put your life savings into this thing, $200,000, whatever it was, you don't want to walk away from the purchase of the insurance for that business and go, I wonder if I did that right. You want to have somebody, Mary or whatever her name is, that was your professional insurance agent and advisor to have gone through it and say, we've talked about your business, this is what you need, we've gone to the market, these are the right prices, go home and sleep well. Well, that's an extra value proposition we got to add.
Well, let me just add to that, because I 100% agree with you. That is why our NPS score is 88. I would dare say that's the highest NPS score in this room. We're not a carrier, it's easier. And the reason for that is because we do sell trust. We do call you if you want, and that's the difference, if you want it, and we'll say, hey Chip, you're a first-time home buyer, we understand, we do this all the time. Oh, you're refinancing your house? Do you actually understand what your coverages mean? Let's explain it to you. You don't want to talk to us? No problem, we're on your time. So we do that too, and I agree completely. We need to sell trust as an industry. I just think that, for me, again, going back to the problem is, what is the value that I'm giving to someone? And that relationship is a value.
I would argue in that case, you are an agent.
We are an agent. No, we're totally
Absolutely.
Agents.
He's a digital agent.
Just the next generation of agents.
And that's how we think about ourselves, as the agency of the future, right? And so,
see, to me, I don't look at this whole thing as disruption. I look at it as enablement, really, in many respects, right? So, but you're solving something that perfectly with technology, right?
My thesis is the true disruption in insurance is not technology, it's distribution. That's where I live.
But I think that it's about enabling more efficient distribution in the marketplace.
Totally.
Okay, so should we move on, or we want to keep, any questions at all? Somebody's got to, I can't, the lights are, maybe you can get a microphone to this person here. I think I see an arm raised. Can you hold on, please? Hold on 1 second. Go ahead.
Will all customers engage digitally?
Sorry, would you repeat that?
Will all customers engage digitally?
So I can start that off.
Well, my answer is no, but go ahead.
No, of course not. And Chip, you hit the nail on the head. And I think fundamentally disagree is a strong word on certain items, but you hit the nail on the head. It's trust, right? So it just depends on the person. You put a great slide that says 80% or 70% start online, or they shop, or 5 times more shop online. They definitely shop online, but biggest home purchase you're ever going to make, or biggest transaction you're most likely ever make, there's a good opportunity. Again, what's the problem I'm solving for? Do I feel comfortable? And if the answer is yes, then I will shop online. If the answer is no and I want more help, then that's no. So that could depend on A, the person, and B, the customer experience. If I go to this website and I get every single answer to my question solved right there, I'm not going to go talk to somebody because I feel comfortable. If I don't, then I'm going to call. And again, so the answer is, will someone go online? It's if they trust that website enough.
Yeah, I'll just add, we have a mantra to get the right risk, right account, customer, to the right agent. I would count Aaron as an agent in this case, at the right time. That last little bit, by the way, is where we fall down all over the place. And he's got a great point. If you can, when that person needs it, and going to your question, when that person needs help, if they're in a situation where they're ready to engage mobily, and that's when they need the help, and you can connect them to the right agent that can help them, or the right provider, I'll use that word for a minute, and give them the right product at the right value, and you can communicate that level of trust where they feel like, you know what, I'm not going to get ripped off, and I'm going to go home and sleep well. Put all those things together in one moment, sure, digital's perfect. If it needs to be old-fashioned face-to-face, then that's what it needs to be. The customer rules.
Yeah, I think it's a bit of a sliding scale too when you look at the journey of a consumer. When you don't have a lot to insure, you don't have a lot to lose. As you go through life, you accumulate more wealth, and some people do a better job of it than others, but you become more concerned with the quality of advice that you're receiving. And I think people are going to want that personal touch and not talk to necessarily an AI.
So I was going to say one more thing on that, and actually, because I kind of poo-pooed the agency for a second. I really think the future of an insurance agent, if you're more an IA, a traditional IA, is that service to that higher end clientele. It's that advisory, but again, that's less knocking on doors. That's more knocking. The mid market goes away, and I think that higher market becomes, to your point, the more valuable your assets are, the more you're going to want to talk to someone who's been doing it for a while. The
mid-market, that's interesting. So one of the questions I do have is what product lines can be automated? I mean, we're talking about, things here that I think are pretty important to consider, right? I mean, so does the small commercial become automated? Then does the mid-market, upper market commercial not become automated? I mean, there's so many people talking about the direct market, small BOP policies, things of that nature, and there's been attempts at putting together online companies to do that. So what are all your thoughts on what can and what cannot or should not be automated?
I I mean, I think quite often people look at that and just, to your point, personal insurance, small commercial insurance. I don't think it's about size. I think it's about simplicity or complexity. So you can have a large commercial risk. If it's pretty straightforward and there's multiple plants somewhere or factories or distribution, whatever it may be, actually I don't see any reason why that can't be automated. And again, it comes back to, it can be automated because the information can be collated in a really meaningful way without needing human intervention. You don't need to manually add up all these locations or whatever. It can just, that data is aggregated. Anything that involves, different levels of complexity around coverage or risk management, I think, and that can apply for somebody that's a high-value homeowner, high-value personal insurance versus high-value commercial. I think it's the complexity versus simplicity that right now, that's the spectrum.
I'll just add, I totally agree with what these guys have said. I'll add one more thing. We record about 10,000 customer phone calls a month, and we have learned so much from that. And one of the mistakes I think we make in our business is we sort of take a typical customer in our mind, like, oh, a homeowner, so, they have a house, and they have 2 cars, and maybe they have a dog, and sort of. But the problem is, actually, when we listen to those calls, you can't believe the majority of people have some special situation. I'll give you an example. Well, my son's at college, and he's technically borrowing a car that belongs to our uncle. It's an endless thing. Well, my neighbor parks his boat at the end of my dock. Is that a problem for me? It just goes on and on and on. So, I absolutely agree automation in some cases, but I just can't believe how many times the exception seems to be the rule more than the average.
Yeah, I'm thinking about travel insurance and from a Canadian perspective. So we have what we call snowbirds. So these are Canadians that want to get away from the cold. And so
not just Canadians, by the way.
Okay. They head south. Now, if you're employed, your travel insurance is usually, your out-of-country medical, what we technically call it, is normally provided by your employer. So you don't have to worry about it. But if you're retired, you're not employed anymore, and now you have to buy it privately. So a couple of problems that I can see there is that these are medically based applications. And I don't know how you could suck in private medical information into the application to automate the process. Maybe you can, but I think there's some privacy issues, at least in Canada, revolving around that information. The other thing, and I'm thinking maybe an AI might be better at this than people. The elderly, there's nothing that they like to talk about more than their aches and pains. And on the travel application, there's 30, 40 medically based questions that if you're talking to somebody that's 70, there's going to be a lot to talk about. So maybe an AI could have that conversation much better than a human because you need a lot of patience.
Okay, so legacy systems, right? We all are familiar with them. I actually used to sell an IBM 4300 series back in the earlier days. So a lot of firms, a lot of insurance companies have legacy systems, and finding the people, I've done a little bit of research on this, and finding the people to take care of people who understand COBOL or Fortran, it's not as bad as people think. But how do you integrate within these legacy systems to do the things that you might want to do as a company, as a firm providing products, APIs, for example, to your client base? How does that interface take place? So I don't know if anybody has any thoughts about that at all.
Well, I'll go based off what I was at a conference yesterday, and one of the insurance carriers said, mirrored exactly what you said, which is carriers are spending $50 billion or something ridiculous the next 4 or 5 years to take their systems from legacy to the next step. So I think carriers understand this and they're moving towards that. And even today, again, there's middleware. We integrate with many APIs, and their APIs, right? They have a middleware in their legacy system. So, as they move to the new systems, they'll just remove the middleware and things like that. So it's actually been pretty, from our perspective, and again, we're in a very narrow-minded, we're homeowners, but it's been pretty rock solid. Actually, the carrier's been doing a pretty great job considering of their systems are from before you were born.
It's interesting because one of the things that I've heard at a couple of conferences is the cybersecurity issues with a lot of the newer systems, because a lot of the older systems, the documentation in place for those systems was much more substantial than the systems sold today. So anyway, anybody else any thoughts on?
I'll just add, I think some of the, Jason talked about the agency management systems and the ones that have been around for a long time. We all know who they are. I really am impressed with some of the smaller ones. I think they're making good progress, and I would say that across the board, on the carrier side too. Lots of different integration tools that I've seen that people are working on. Probably a few, they're going to display something in that room over there. So I'm encouraged. I don't have an exact answer, but I think things are looking really good.
Any questions at all? Yes, please.
Just wanted to make a comment about the online versus the agent. A client doesn't always know what they don't know. And that's whether it's the first-time homeowner or the middle-aged business person that's got 20 employees. So I see the challenge. I think it's great that we have the platforms, that we're doing a lot of things digital, but I don't think, well, you can say, I guess the term that we use is you can talk about maybe making it more economical to sell more insurance, but in the end, you won't be able to keep those customers if they find that it didn't really work for them. I get clients all the time who go online. I won't even mention what I do, but they just go online, no problem there, but then they start talking to me and they go, oh, I didn't realize, yeah, there's this, if I do this, there's this problem here, or if I don't do this, or what about the taxes, or what about the umbrella policy, those kinds of things. So just a comment about that.
No, I think that's really smart, and I think that's certainly going back to our NPS score. Right now, there's a hybrid approach, and we find that all the time where you don't know everything, and as you talk to a customer, the more and more unravels. And I think you had mentioned something similar. So there's not a perfect solution, but again, ours isn't. I want to make it clear. What we're doing isn't saying, hey, digital's better. That's it. What we're saying is being at the point of when you're needed is better. And that is what we try to accomplish.
I think digital isn't, I fundamentally think digital is not about cutting out the engagement with an agent or a broker. It's just making that engagement more relevant. It's not relevant for me to spend 15 minutes on the phone answering 20 questions. It is relevant for me to spend 15 minutes on the phone with somebody who's challenging or adding value to the decisions I've made. And if you go to the other end of the spectrum and people talk about AI and all the great things that AI is going to do, and yeah, that's great. AI is going to take away a lot of the admin and the process and the data gathering, or whatever it may be. One of the risks of AI is learned bias. So if learned or inherent bias that develops, so if you aren't engaging with somebody and actually a system sees that most people buy, I'll pick an example, only $1 million worth of liability coverage for their auto insurance, it might start to recommend that, because 9 times out of 10, that's what people are buying. It might miss the intricacies, your point around, well, actually, that's not going to work because whatever personal situational circumstances exist.
Yeah, but shouldn't that, go ahead, Kim.
Yeah, I was just going to kind of tag on to these comments that insurance is an interesting transaction. At the point of sale or the point of applying for the policy, if you don't get the application process right, or if you buy the wrong coverage, and a claim happens, you can't fix that. You have to live with that. And that can be $1 million or a multi-million-dollar mistake.
Well, you're all nodding your heads up here. So why? You can't make the changes before? I mean, you can't make changes to it?
After the claim comes in, no, that will not work.
No, not before the claim comes in, but you can't make changes before that?
You can, but you don't know that, to her point. You don't know you made a mistake yet, right? So you think you're fine.
That's a good point.
And then the problem happens, and I think Kim's exactly right. This is too high of a stakes purchase. It's not like buying a book on Amazon. You want to know you did it right.
To Jason's point, though, if I'm going to get a mortgage and I give my mortgage lender all the information that the carrier is going to ask me, as a borrower, do I really need to tell my insurance agent the exact same thing I just told someone else? And I completely agree. Removing the administrative work is the next.
Isn't that the real key? Don't you really want to make the producer much more efficient at what that person does and take away a lot of the administrative stuff?
Yeah, we have agents. I mean, so we have a lot of agents, so they're just highly effective.
I would say anybody in the audience, if you're saddling your producers with any administrative things that they really don't need to do, you need to rethink what you're doing with that.
Because I think you said something that was really important, which is I think you said this is a distribution challenge, right? What's the problem you're trying to solve? And for me, how does somebody that doesn't have a relationship with the point of sale of somebody needing insurance and information that's transacted at that time get ahead of that? And the most stark example of that for me at the moment is in the auto industry. So Volvo, Porsche, General Motors, several others have come out and said, you can buy a subscription service now. You don't need to buy a car anymore. You can pay every month. You can change cars if you want, multiple times a year. And included in that monthly purchase is your insurance. Now, whether or not they're self-insuring or partnering with an insurer or a reinsurer or partnering with a really well-established or a digital broker or a series of agents, it's kind of irrelevant. What's relevant is, if you're not that insurance partner, I don't know how you can compete. I don't know how you can get your foot in the door to prove value.
Is this in Canada?
No, actually, it's more in the US than Canada.
Yeah. We have situations in Canada, British Columbia comes to mind, where brokerages actually have a satellite office in an auto dealership. Now, that's the old school way of solving a problem. Your way, I think, makes a lot of sense. So, having somebody sit at a dealership waiting for somebody to buy a car so they can provide service is maybe not the most effective use of that person's time. If you can automate it, great.
Well, look at what Tesla's doing, right? In essence, with the insurance product as part of the whole purchase. So it's interesting. Any other questions? Yes. Oh.
Hello. So I live in the UK, and I'm a very typical insurance buyer. I do it all online. I don't use any advice. I just do it myself. So my question to you all, how do you buy your insurance?
I was going to ask that question also.
Beat you.
Well, let's start down here.
I buy mine from a Trusted Choice independent insurance agent.
He better say that. He buys it from himself.
No, I don't. I am a licensed agent, but I don't buy it for myself. Because then I wouldn't have the benefit of holding someone else accountable. So.
Do you buy anything online at all, as far as insurance?
Have you?
No.
Okay. Kim?
I have bought travel insurance online.
Okay. Yeah. Travel insurance? Okay.
Like out of country medical.
Yeah. I know the answer to this question.
I just go to one of my agents and say, take care of it, to your point.
Yep. Ah, interesting.
I rotate my insurance every year with a different broker because it allows me to have a different lens on brokers that we deal with. So
yeah.
I guess
my answer is travel insurance primarily. There's a couple of investors that I've dealt with over the years. They're younger investors, and they purchase Lemonade's products because they're so incredibly easy. And I said, well, what's the claims process been like? He said, it hasn't happened so far. So, but why do you think that in the UK it's so much easier for people to, you.
Hello? Sorry, the microphone keeps going off. Well, that was my question, actually. Why do you think we in the UK tend to buy things online and do it all ourselves? What are the... I think I know the answer to the question, and why you guys don't.
Well, you got to give your answer first, then.
Yeah.
You're handicapping us?
It's highly regulated. Brand doesn't really mean much anymore, and it's all about price. Yeah. And actually, our digital experience is far richer, I'd say. Because I've also lived in the US, and I've experienced that as well.
I think the UK is the most hyper-competitive insurance market in the world. Partly, a big part of that is because of lack of regulation, or lack of price product regulation, different kind of federal and prudential regulation, but that's a big, big factor. We see the competitive, like the churn of new ideas and new propositions in the UK, I think is richer than anywhere else. The price point as well. The average car insurance in Canada is way higher than the average car insurance in the UK, and I think it's just because there's been way more multi-distribution, way more competitive forces that have come into the UK market. If you look at the different distribution channels, the disruption that digital aggregators created, just that phenomena I don't think has been seen anywhere else as much as the UK.
The websites in the UK, or the comparison shopping websites, are far, far superior than what they have here. And it's more of a, like you said, it's more of a price culture than I would say, although, and also depends on the product too. And for home specifically, where it affects me is the bank can actually say, the bank can also sell insurance, where in the US they cannot, which makes a market for companies like myself.
Hold on 1 second. Just to that point, do you not think the UK represents this issue in a nutshell, being that at home, you don't really need that parochial expertise because a lot more one products do fit all sizes. We don't have weird weather patterns. Most people have the same experience. Most people drive the same types of cars. And so you don't need that local expertise, where I think there is a sort of balancing act here.
Yeah, I don't think, again, you know, when you look at, you can't turn the television on for more than a few minutes without seeing a, you know, aggregator, one of the websites advertising. But what they're advertising is not dissimilar to what brokers should be advertising. It's just being delivered in a far more instantaneous digital web-based format. Choice, you know, to be able to get the, whatever it is, the Expedia of insurance or the Travelocity equivalent of, okay, you put in a few pieces of information, you get all of these options. That's, to me, what brokers do. I don't see a big difference between that and what brokers will do in the future and actually what our most digitally focused and, in some instances, highest growth brokers are doing. They're not doing it with human touch. They're not speaking to everybody. That process has been automated and digitized.
Any other questions?
I have a question. I guess I want to bring up the generational question. I am an actuary, so I work in insurance, as I'm sure most of us do. But my friends know zero about insurance. So they don't go to an insurance agent because they don't know that they need insurance. Like, I have life insurance. I couldn't tell you a single other of my friends who have life insurance. It's like, well, are your parents going to pay for end-of-life expenses if something's to happen? So I've had those conversations with some friends, but, like, that's not my job. But so how are you reaching people? Or is there, maybe that's a gap that people in this room are trying to answer. How do you reach the people who don't know what they don't know? And I'm going to be honest, I'm in the similar boat of I shop online first for most things. I can't buy most insurance there, but like, I guess just how do you reach those people who don't go to an agent and say, do I need insurance?
All right, everybody gets a shot.
Yeah, I'm going to actually add on to your question, because I don't just think it's about not needing insurance or not knowing what you need. Actually, the number of young people getting driver's licenses is plummeting. The amount of new car sales is radically changing. So where I grew up, my first introduction to insurance was needing car insurance. Right? I had a £2,000 car, and apparently I needed £4,000 worth of insurance coverage. Right? So that's usually people's first introduction to insurance. That's fundamentally changing for a lot of people. So I just think that compounds the issue that you're raising. I'll let the other guys answer your question.
So as a part of the generation that you're in, there's a couple things. So I can't speak to life. I'm like Rain Man. I only know home and everything that touches me. So auto, umbrella, things like that. But you know, I've spoken with a lot of panels, and you know, they're building new products because it's more, you know, and everyone in this room has probably heard of on-demand insurance and things like that. So it's trying to figure out two things. Number one, how to get them when they need it. So, or telling them, hey, this is a time when you'll need it, right? So being at some sort of value prop. And then two, to your other point, which I thought was perfect, which is I shop online, but I can't purchase it online. Well, I've spoken with so many carriers, specifically in life actually, who want to change that. And so when you have, I was at a conference yesterday speaking on a panel, and they were talking about how their underwriting guidelines haven't really changed in 50 years. So if you're going to have a digital product, you might need to change those a little bit. And so, and carriers get this, and so they're changing it. So it'll take time, but it's, again, getting at the point of sale, whatever that sale is for that product, and being able to fulfill digitally if they want to.
You know, I'm thinking in terms of a lifetime relationship with a potential client. And I don't think the insurance business has done a great job of cultivating those sorts of lifetime relationships. And we're missing the boat in that area. So part of it's education. Concern I have with some of the new entrants, the digital entrants, is that I'm not sure they're really, I think they're oversimplifying the purchase of insurance. So they're covering your camera when you walk out the door. But as an insurance broker, I know that claims happen when you're sleeping at night and your camera's right beside you or in the next room. Liability's not being covered. So I think there's a risk of, what we're seeing happen right now is that there's an oversimplification, and people are walking out the door, making a digital purchase, thinking they're covered, and they're not really holistically covered. You know, there's gaps, and that really concerns me.
But I think isn't one of the goals of some of those situations where if they get somebody to have one product, eventually they might add a second or third product, they might, as part of the whole buying process.
They might, but I'm talking about products that are fundamentally poorly designed that are being sold digitally. So again, I think you need that professional advice, and whether it's a broker that's guiding a startup on how to package the policy or how to package the coverages rather, there needs to be some professional guidance there.
I'll take a different tact on your question and just say that I think we've done a poor job as an industry in educating the public about what is insurance for and how do you buy it, what's the smart way to buy it, why does it cost what it costs, where's the money going. There's a number of companies now that that are starting to sort of call attention to that, like how much of your money goes to pay claims and so forth, and what happens to the profits, and I won't mention names, but they're bringing up interesting questions, right? So I'm going to say that we should have done a better job 20 years ago at educating the consumers about how, what's the difference between an independent agent and a captive agent.
I would argue that what's also happening is the buying process has changed. Social media is driving a lot of things, and maybe parts of the insurance industry aren't paying attention to how people want to buy products.
Sure.
From a marketing standpoint, just when you go to in Vegas and you play 21, don't say insurance is the worst bet in the house. I mean, right? That translates.
That's a great point. Yeah. We should actually pay Vegas to make that a great bet.
That's good marketing.
That's what we should do.
We have about 4 minutes left, so any other questions? Yes.
Just one for me. So, Jason, you started by saying that carriers are not particularly good at product development. Chip, you've got 20,000 people explaining very complicated products to consumers. In the middle, we're investing in technology to try and automate and simplify that. Fundamentally, are carriers doing enough to build, customer-centric, simple solutions?
It's a great question. I think the simple answer is no, and I could move on, but you're looking for a bit more texture. No, they're not. I think, separate manufacturer versus distributor, right? So what are the core principles, things that an insurance company needs to be great at, the basics, right? There's lots of great stuff around digitization and new tech and new partnerships, but if we don't move on in what I think the comment earlier was digitizing a bad product or an irrelevant product or a product that isn't resonating, digitizing 43 pages of a policy documentation doesn't really help anybody, right? It's bringing it, making it relevant. And I use auto insurance as maybe one example. Canada is a challenging space for this because of auto regulation across different provinces, but if I think about what happened, I don't know, 10 years, 15 years ago, whatever it was with cell phones, right? It was, you had a plan and you paid your annual plan, and then it became a monthly plan and then a weekly plan. Now it's a per second plan, and now they've actually gone, you just got a ton of data, see what you need and you use. Auto insurance hasn't followed that cycle, and yet, what's the stat? 96% of people's cars are parked at any given time. So if you think about, the telematics and usage-based insurance in insurance, I think is a bit of a, it's a bit of a red herring, because it's not really usage-based insurance. If I pay exactly what I would have paid to begin with, but I can get a bit of a discount depending on how I drive my car, that's not true usage-based insurance. True usage-based insurance is, if I don't use my car, I don't pay any insurance, right? So I think one of the things that I have a view of, a bit of an optimistic view is, at least where I work and some of the other companies I'm close to in Canada and elsewhere, there's some really interesting talent from outside of the insurance industry coming into the insurance industry now. There's always going to be a time and a place and a space for people that really understand the fundamentals of insurance, but people to understand what's meaningful in terms of when you build a proposition, what's going to make them come to you rather than, they have to come to you because they have no other choice. And I think it's people from outside the industry and some fresh thinking, not losing all the fundamentals of insurance, but properly building on that that's going to make a difference.
We have about 1 minute left. Anybody else have any quick thoughts on that? Okay. No? Okay. I think we are all set, and I'd like to thank the panel for a great discussion. I thought it was terrific. So you're all going to be around for the rest of the day, right? So if anybody has any questions, you want to chat with these gentlemen, they'll all be here. Thanks.
Good job. We did all right. That was fun. That was fun. Yeah.
We're having a break right now. Come back in about 15 minutes or so. We'll have 10 startups pitch on renewals, underwriting, and onboarding automation. So you don't want to miss that. You want to get back right around 11:15. We still have coffee, fruit, and snacks in the back. Thanks. Table in the back. Mike. So the mic's